Good morning. Welcome to the B.F. Anderson Technical Report for July 23rd. Just wanted to point out this screen right here. I thought this was an interesting study. It's prepared by LPL Research, which basically says what happens to the stock market in the past when Democrats controlled the White House and the Congress, where there was a total Democratic control. Going back to 1951, you can see Harry Truman, then John Kennedy, Lyndon Johnson, Jimmy Carter, Bill Clinton, Barack Obama, and you can see that the average return during those years, there was only 3 negative years, which were sandwiched between positive years, but the average return was about 13.2%. So I wouldn't make too big a deal out of politics. I don't really think it has a whole lot to do with what's going to happen to the stock market, because the stock market is pretty much driven by corporate profits, and that's the reality we have to deal with. Now, let's get into the charts. You can see here that the NASDAQ continues to stay at a very positive uptrend. Both moving averages are positive. That's the 25-day and the 50-day moving average on the NASDAQ. NASDAQ continued to make new highs. Very powerful uptrend. It's hard to argue with it. On the weekly basis, we're getting another confirmation there where the 35-week is above, the index is above the 35-week. Remember, the rule there is that if we go 2 weeks below this particular moving average, that's not a very good sign. Then when you break out, go 2 weeks above it, it's showing a pretty good improvement. Now, which we got back a ways back. And the market's been very positive. Now, on the S&P 500, looking at it on a monthly basis, you can see that the trend is very positive. Now, most people don't look at monthly charts, but I do, and I think it's important. And so you can see your trends a lot clearer, and what we have there is a 10-month moving average versus a 20-month moving average. We look for golden crosses. We look for death crosses, which you can see we kind of had a problem around here around the time of the election. But ever since the election, things have been pretty darn smooth sailing. NASDAQ, same story. This is the monthly graph. You can see the trend is very positive. This is a bull market. Here's China. We're seeing much improvement in China. It looks like their economy is starting to improve, and maybe even better than ours, because they went into the virus earlier than we did, and they may be coming out of it. This is the aggression index, very powerful sign here. This is where we're taking a ratio of the NASDAQ compared to the consumer staple stocks, or technology versus toothpaste. And you can see that, we had somewhat of a pullback, nothing really major, but we did have a pullback, held right around this area here. So this is to be expected. This is normal. The main indicator, though, is this one on the weekly basis, where we're taking the same ratio. The indicator is, as long as that lower moving average, which is the 40-week moving average, stays in an uptrend and the ratio stays above that moving average, well, it just means investors are aggressive and things are happening. Now, here are the 3 economic indicators we keep looking at. This is Treasury bills, Treasury notes, interest rates are flat, nothing happening there. Texas oil, West Texas Intermediate crude continues to stay flat. I would continue to avoid oil. Now, I added a different component here. I did have the VIX last week, but I've changed it to the XLF, which is the financial stocks. You can see that the bank stocks, which are very important to the economy, have pretty much flattened out, pulled back, flattened out, really not doing a whole lot. We would like to see the bank stocks rally. Now, here's what I changed up. This is the put-call ratio, extreme fear, extreme greed. This is where institutions are buying puts or calls to hedge their portfolios. It's a secondary indicator, and you have to remember that. It's the problem with sentiment is that people can stay greedy for a long period of time, or they can stay fearful for a long period of time. It's just something to be aware of. And then if you look at the VIX, you can see what that means. This measures volatility in the market. So if you see here, we got extreme volatility. When you get back below 30 on the VIX, that's where normalization starts to take place. So if you're in an uptrending market that has low or normal volatility, you can kind of see why people start getting greedy. So these two kind of go hand in hand. Excuse my dogs, I'm sorry, working from the house today. This is the S&P 500 on the 25 and 50-day moving average. You can see here that we kind of got somewhat of a breakout here on the index. Again, the S&P has continued to hold the 200-day moving average, which is an important moving average, and we are seeing a bounce. So in other words, this becomes resistance, now becomes support, and is now back into an uptrend. S&P looks good. New lows on the New York Stock Exchange, no problem. We're not seeing anything over 40 a day. That's where we start, getting concerned and watching, but we're not seeing that. This is just a graph of the China large cap stocks. You can kind of see the breakout. I do want to just say that it does look like the Chinese stocks are picking up steam. This is home construction. You can see almost a new high in home construction. It just seems like you just would not imagine how much demand there is for homes at this time, but very positive trend. Now, this is a blast-off indicator. This is something that you really need to be aware of. This is what we do is we go and find lows in the market, and we'll say, okay, well, how many times have we seen a blast-off? Now, what a blast-off is where you go and we're using the New York Stock Exchange percent of stocks above their 50-day moving average, where you get to an extremely, very few stocks above, like 95% of the stocks are below their 50-day moving average, and then you get a blast off that puts it up to about where 90 to 95% are above their 50-day moving average. This is kind of a rare thing. It's a blast off indicator, and basically what the studies show is that every time you get a blast off indicator, historically, the market has been higher 1 to 5 years out. So, it is kind of a long-term indicator. So here's 09. You can see what happened in 09. Here's 2011. So you've had 1, 2, 3, 4, 5, and now the 6th blast-off indicator in the market. And you can see where I've marked on the S&P 500, the market, it always seems to be at a bottom when you get the blast-off indicator, and then 1 to 5 years out, the market's higher. So it's really very important to observe and not ignore. All right, here we have a comparison of the Charles Schwab large cap growth stocks compared to Treasury bonds. Just wanted to show that stocks are outperforming bonds here, and that's a very positive sign. Again, semiconductors, looking at the Van Eck Vector Semiconductor ETF compared to the S&P 500. Semiconductors are kind of like the old transportation stocks. They're pretty much the crux of the economy. Everything has semiconductors in it, so when you get a strong pattern in semiconductors, that's a very positive sign. So that's another graph we're looking at. Now, I did want to point out energy continues to look weak. We're seeing a major sell-off in the energy stocks, somewhat of a rally, but then again starting to fail here. It's really a complicated situation with the energy situation, and especially when you start thinking about the future of electricity and electric battery technology. Is this having somewhat of an impact on this group? Could be. We need to keep an eye on it. Here's the top 5. Now remember, the top 5 is a watch list. We're not necessarily going to buy these stocks. It's just kind of giving us a sense of where the strength is, where the leadership is. Well, this is Dexcom, which is, we've talked about before. Diabetes, glucose monitors. Stock continues to stay in a very powerful uptrend, yet somewhat of a pullback. Now there's Fastly, which is a company that they're like Fast. They software platforms that help the internet move more quickly and more efficiently. Here's Novavax. We've been watching Novavax now for several weeks. This company claims to have a vaccine. You can see that it's definitely holding above that 10-day moving average, making new highs almost on a daily basis. I think they might have something. They just got $1.6 billion from the federal government on the Warp Speed project, where they're going to go ahead and start manufacturing their vaccine, even though it has not been approved by the FDA. Sunrun, interesting story here. This is a company that is pretty much partnering up with Tesla. They are, and like a Generac, what it is that they are now able to put solar on your roof, power a battery pack, and then use it like as a generator, as a backup system. It's an interesting company. If you go to their webpage, you can clearly see what the company's involved in. But what we saw here was a major gap up buy signal on 20 million shares. Stock gapped up, has held that gap ever since, and continues to stay in a very strong uptrend. Tesla announced earnings last night. Everything looks good. Stock's basically going to make a new high this morning. I haven't really checked it. But we've got a lot of good trend here. As long as it holds above that 10-day moving average and continues to make new highs, we're going to continue to like the stock. We do own Tesla, and I did need to mention we own a Sunrun as well. Now, I just want to mention Novavax we don't own. I'm a little afraid of it just because it's one of those types of things. Don't own Dexcom. But anyway, if you have any questions, feel free to give me a call. Thank you very much.